This is the S&P weekly chart. I continue to point out over and over that we have not reached this upper boundary. I still think we're going to do it. I told you last weekend to watch. Would we close this week strong or would we close weak? Well, we had a down week, but we closed strong. We were down over 2%, 2.14%. We only closed down 0.5%. We closed strong, not close at the lows of the week. I told you we had a doji last week that could mark a reversal. If we have a wide range bar and a doji and you get a wide range bar to the downside, could mark a reversal. We could, have it close but no cigar. But I told you, I still thought, the week I talked about it, I still thought we would come up here. I still think that. Now, again, it may be we're getting back-to-back bearish candles. If this is a doji followed by a hanging man, my guess is it's a bottoming tail. And you have a 1, 2, 3, 4, and a 5. It looks like a 5-leg push higher to me. And I think we're still going to go and rally up into this trend line into the Fed meeting. It's predicted an update today. The VIX got it right. So again, I continue to believe we're going to reach this upper boundary of the channel. I think we'll rally into the Fed meeting. Meetings have been calling the turns over and over again. Again, I do think that will complete the negative divergence in all likelihood. It might be done here. Negative divergence on the RSI, the awesome oscillator in the weekly time frame that I've been talking about. My guess is that this is a wave 4 correction and we're going to get this wave 5 over the next 2 weeks and come slam up into this trend line here. I've marked this date right here, the wave 5 for the 12th, which is the day of the next Fed meeting. This is the weekly chart, so you get one candle per week, so it's just marking it 2 weeks forward with that bar. It'll be the week of, just in a week and a half from right now, the week of the FOMC meeting. That very same day, we get the CPI data. Went down to the 50-period moving average on the daily chart in the S&P. Buyers were right there. We went down to the 200-period on the 60-minute chart of the S&P, and again, testing those levels of support. Buyers came in and gave us this bottoming tail here on the weekly chart. Other than a hanging man, I think we've got a bottoming tail in all likelihood that's going to take us up for a few more weeks. And then I think you're going to get something that'll, and maybe we even overthrow this level. But I think that we came down here to get this rally into this level, or maybe even overthrow it and redefine the trend line a little bit. And then I think you're going to come back down here to this midpoint. That's going to be where the 200 period is coming in, likely by the time we reach it in the daily time frame. Flip over into the daily time frame. Again, this is what I think is going on. I think you've got this 5-leg structure that's going to push up into this trend line right here. And then I think take us into the CPI data into the 12th. And I've marked that on the 12th, June 12th. Could reach this level before June 12th, could reach it just after, could even overthrow this level just a little bit. Trend lines often redefine themselves. But I told you, I thought we would still reach this level. I think that's going to happen. I think that the correction could be done now with this bottoming tail. But I think we go up into this level, and then I think we roll over, come back down again to this midpoint, horizontal support here. And I think that the 200 is going to keep rising, and I think we'll reach it if we rise up and then start coming back down. And again, then you've got your possible right shoulder that could form, and we could see a head and shoulders formation. But I do think that the head formation is probably not done yet. Although, again, I do believe that it is likely that we're going to see the RSI complete the diversions. It might be done if we can't make new highs. Say this bearish engulfing that has now gotten a confirmation, but no follow through. Look at that. Again, I talked about this at great length of detail. You get the same pattern over here. Again, let me just zoom in right here. Again, we got the bearish engulfing. I told you to be watching this because we got a bullish inside day, but I told you it could be something exactly what we had over here. Got a bullish inside day, bearish engulfing. After our little miniature double top, you have the same thing happen at the July peak. You got a lower high. You got this hanging man looking candlestick. Here we got a hanging man looking candlestick. We ended up confirming the pattern on Thursday. Here we had a delayed reaction. We confirmed the pattern, but here the difference is we sold off and there was no follow through. We closed back up above the low of the bearish engulfing. There was no confirmation and follow through. So again, you got to have both in order for a turn to happen. Then you got to remain below the 10-period moving average if that's going to play out. We got a confirmation, but now we're getting a bottoming tail at the 50-period moving average. So again, I think you're going to end up trying to rally back up here. I could be wrong about that. Maybe we get a lower high and turn. That's possible. But again, we've had this big rally on the Dow. I told you the Dow might go a little bit lower and bottom out, or it might bottom out with that bottoming tail that we had on Thursday on the 60-minute chart. S&P went lower, but the Dow didn't. Dow ripped higher. I think it was over 500 points higher by the close. It's become very, very oversold, as I've been talking about. The key levels of support. And I think the Dow is going to get this big rally back up in all likelihood. That will carry the S&P to new highs, as I've been talking about. So again, I think that the correction is done. It has a good shot of being done. I think we can reach this level here going into the Fed meeting over the next week and a half. Even do it after the Fed meeting. Fed meetings have been calling the turns in the market. Called the top over here the day after the Fed meeting. Called the bottom over here with the higher low here with the last Fed meeting. The previous meeting, if I say that. Fed meetings have been calling the turns in the market. So I think we're going to still rally. And then again, maybe we peak ahead of the Fed. Maybe we peak with the Fed or just after the Fed. We bottom just before the Fed. Here we top just after the Fed. So again, the Fed has been marking tops, bottoms, and continuations. The VIX predicted this rally that we had today, 3 days ago. VIX got it correct. Please support the channel with the link directly below that allows me to be able to provide you this information. Follow the link, it'll take you to a secured site. You can donate any amount you want. A recurring donation, if you do that, I thank you. Take a moment to do that. I would really appreciate it. I do need your help at this time. I just put all the information out there for free. Just ask that you do what you can to help. I don't have sponsors because I don't want to sell you a bunch of stuff you don't need. So please consider helping out today. I thank you for that. Check back for my video on Sunday morning at 7 a.m. Eastern Time. Talking about some of these indicators, how, again, they couldn't, the trending signals flipped, but they started to, some of them did, and we weren't able to do it at the bottoming tail on the S&P and on the NASDAQ. Check back and I'll talk a little bit about the PCE data. Came in pretty much in line with expectations. Touch on that briefly. After being down over 100 points at the lows of the week, and the short trading week, the S&P rebounded. It closed strong, not weak. You might have a hanging man candlestick. I think it's more likely it is a bottoming tail, and we're going to still go up and try to hit this level and maybe even overthrow it, as I've said. It's possible the divergence is done if we stop making new highs, but my guess is we're still going to try to go up and slam up into this area and maybe even overthrow it. We again are likely completing a divergence or about to complete it. If we stop making new highs and it's done, if we go a little bit higher over the next week or two, then again, a little bit more time. But this is likely forming the negative divergence, similar to what we had at the 2022 top. And again, got major resistance up here in the monthly and the weekly time frame. So again, maybe we overthrow this level a little bit, but this is where I think that we're headed. It could still be close, but no cigar if we start seeing turn bearish, but we dodged the bullet. So off today, we never did get the follow through. The signals that had started to turn bearish today, some of the swing trend signals, failed to do so. We had a strong close. I've talked about the S&P 500 possibly forming a divergence here in the most recent price action on the RSI and the MACD if we rebound. We came down to just above that 50-period moving average. Got a rebound. We opened here. We've sold off. Again, we were down over 100 points. Rebounded back up and had a close, a positive close, 42 points higher, a positive close, 0.80% higher. So we went down, dropping 1%, but ended up closing 0.8% higher, nearly 1% higher. We had dropped below the 20 period, went down to the 50. We closed back above the 50. We bounced, closed back above the 20, bounced just above the 50. Again, I think we're going to move to fill the gap, as I've talked about, the gap that we've had from a few days ago. I think that will take us higher and hit that upper boundary of the channel, and that intersects right here with the highs over here, which I've talked about earlier in the week. If we include the shadow, it's pointing up to just under the trend line right there, or maybe we reach it shortly thereafter and we intersect with it right after the Fed meeting. Or again, maybe we exclude the shadow and we reach it. But this is where I think we are likely going. Now, again, begin to see swing trend signals all begin to turn bearish. Momentum can't flip back to bullish and we just go back up and fill this gap and that's all she wrote, then we'll have the possibility of a head and shoulders in play. But again, if we got a lower high and then retreated and not able to push above the bearish engulfing, pattern can still form, but with a lower high and then a reversal after that. Again, my guess is we're still going to reach this level. Like I said, I could be wrong about that. There could be close but no cigar. We had the rally today. The VIX predicted we were going to get this rally. Now, 3 sessions ago, on Wednesday, the VIX was up over 10%. It predicted that in the next 2 trading sessions, either Thursday or Friday, the S&P would form. S&P would get a bounce or a bottom. Have an update in the next 2 trading sessions. There was an 85% chance of that. It was correct. We rose on Friday. We got the black candlestick, the hangman candlestick at the 200 period moving average. I talked about that. I told you this gap could be filled. We're now coming back and filling the gap. The S&P was likely going to rise to fill the gap down from Wednesday that we got. And again, we'll be watching to see what happens with S&P. Can it go make a new high, or does it get a lower high at that gap fill area? My guess is, again, we're probably going to see the S&P attempt to make a new all-time high, that upper channel line, that major resistance there. But I told you, again, another reason why I thought we'd still do that is because of this gap on the VIX, and we're coming back to fill the gap. Now, the VIX is making another prediction today. The VIX is predicting that in the next 2 days, either Monday or Tuesday, we will have a down day on the S&P 500. It was down by more than 10%, 10.71%. And these 10% moves, different probabilities for the S&P 500. And again, just as we had a 10% move higher on Wednesday, predicting the S&P would get a bounce or a bottom, to now the VIX is predicting that in the next 2 sessions, we will either have a down day, give us a top, maybe for a lower high, or we will get a down day and some kind of pullback. I think that the VIX is going to come down in this area for a little while. I think we're getting rejection off the 200, so I do think the S&P is likely going to attempt to make new all-time highs as we go into the Fed meeting in the next week and a half. Next meeting will either mark a top or be a continuation pattern. It is not a bottom. The last meeting was, before that was a top. The Fed meetings have been calling the turns in the market over and over again. It assumes that we continue to rally into the Fed meeting, that it will mark a top or a continuation. Major resistance there overhead. We rally into the Fed meeting or with the Fed meeting or just after it. But the VIX got it correct with our rally today. And again, with the bottoming tail, it is possible that we do have the correction now completed here. But I think is going to likely be a 5-leg push higher into the resistance levels that I've been talking about. Now again, the gap from Wednesday's gap lower, go back and fill that and get a lower high. That would be a sign of weakness if we start reversing, but I think you got a pretty good shot. We're going to make those new all-time highs. Talking about back over here when the S&P completing its rising wedge. I told you we're either going to get the S&P selling off, taking out the 20, getting a feeble rebound, and then selling off sharply, or you're going to get the S&P bouncing off the 20-week moving average, rebounding and getting a lower high, and selling off sharply and taking it out, or you're going to get the S&P bouncing off the 20-week and moving to a higher high and going up and hitting the upper channel line and then selling off and forming the divergence. I've been talking about this a long time. It's a divergence scenario that is playing out. The S&P has moved to new highs. but it's probably going to hit the upper channel line or just overthrow it and redefine the boundary and then begin to turn. Look at the 5-minute chart. We've become very overbought in the 5-minute time frame. Again, this parabolic move higher. This is the gap fill I'm talking about. We gapped lower there on Wednesday. Again, this gap is very, very close to the highs that formed. I think we'll eventually reach that gap fill area, but I think that you're very close to the highs. I think we can even exceed them, upper boundary of the channel that I've been talking about. Now, there might be more work to be done here. Again, the 50 is way down here, still below the 200 in the 5-minute time frame. So again, we might see a pullback. We might see more volatility to get the 50 back above the 200. We do get more volatility. I'll be watching the low from today. I'll be watching to see if it holds or not with our attempted bounce there off the 50-day moving average and the 200 period on the 60-minute chart. Same thing here with the 15-minute chart. 15-minute chart got above the 50. We had this parabolic move towards the latter part of the session. We're just under the 200. Again, the gap fill is up here. So again, I will be watching. We have more volatility to get the 50 back above the 200. Again, they crossed right over here. Here's the top right here with this divergence. If we continue onward and upward, again, we may try to fill that gap immediately, see what happens. But this low's got to hold at the 200 and the 50. 100 on the 60-minute chart, the 50 on the daily. The bottoming tail is going to mean anything that we got in the daily time frame. We'll be watching to see if there's more volatility going into next week there. Watching to see if the low can hold. And if we continue to rally, we'll be watching the gap fill area directly overhead here in the low 5,300 area. We closed out in the high 5,200 area. Again, we closed strong in the weekly time frame. We closed strong in the daily time frame there on Friday. Again, as you can see here with the bottoming tail, we do attempt to fill the gap immediately or at some point next week. Again, I'll be watching that 10-period moving average. Can we get back above it? And we may have some more volatility. Low could be tested. My guess is eventually we're going to make it up here. If not, we're going to fill the gap, get a lower high, and then turn. We can't make new highs. So we'll see which way it plays out. On the 60-minute chart, again, we bounced off the 200-period moving average, the 50-period in the daily, the 200 here in the 60-minute time frame. I had drawn this as a possible bull flag here, and that's still a possibility, but also drawn this trend line now that, again, possible bullish wedge here at the 200 period that got a breakout. If we stall here at the 50, you can back test and build momentum to try to go higher. So we'll be watching that. I told you that we had momentum at extremes. That still didn't stop the S&P. You know, it's funny. The Dow didn't move to new lows, but the S&P did. The S&P ended up closing strong, closed positive, the bottoming tail, but the Dow got a strong rebound and it was up significantly. But again, here, moving off of these lows, still possible that we test these lows. We'll see if they can hold here if we do get some volatility surrounding the 50 period in the cloud. And again, if we take out this level right here, go back up and fill the gap and then come back and take out this level here, then that's going to be bearish. If you pull back and you know, get some consolidation around this level and eventually go back up and fill the gap or fill the gap and come back and get consolidation, then again, we'll be watching to see, can we make a new all-time high or do we stop making new highs? VIX predicted the rally we got today. The VIX predicted an up day. We started off strength with futures, PCE data, and then we began to sell off. And again, we saw the S&P turn negative. Just came back to test this 200, at least so far. Now the rebound off the 200 gave the MACD a bullish cross. Stalled at the 50. We bounced off the 200. We're trapped between support and resistance. We attempted to rebound off the 200 here, but we didn't quite reach this trend line right here from the April low, connecting it to the low in early May surrounding the last Fed meeting. If we pull back, we could still test this level. If we test this low, we might take it out, touch the trend line, and rebound. But again, you start losing the trend line. You start losing the 200 period moving average. or go up and fill the gap and then come back and lose these levels, then that's going to be a sign of weakness. If we do come back and get more volatility and bounce off these levels, the trend line, horizontal support now, then that would be a sign of strength. If we don't come back to these levels, say we get a higher low at the cloud here, the momentum cloud, then again, we'll be watching. Do we go up and fill the gap immediately? Do we pull back and then go up and fill it? And if so, overthrow it and try to challenge the high over here. I say we still may hit that trend line. We get another bottoming tail. Maybe we come back sharply and hit it and get another bottoming tail on the daily. If the 60-minute chart tries to form a divergence. Again, look at this move on the RSI, just straight up, boom. Okay, so again, if we do come back down and we hit this level, might end up forming a divergence or do it gradually and then higher. We don't have to form a divergence. Listen carefully. We don't have to form a divergence with this low. Okay? We got a bottoming tail in the daily time frame. That low very well could hold. When we reached the low over here in late April, we didn't have a divergence. We had moved down to a slightly lower level than the previous low. Over here, we didn't have a divergence from a previous low. We actually got a higher low, and we just reached this level. A little tiny divergence with the most recent price action there, but not with the previous low. We had moved to a higher low, and that formed a bullish hidden divergence here, where we got a higher low, but the RSI moved to a lower low. We don't have to form divergence. All I'm saying is that we could. We get the negative divergence that gave us this volatility. P ends down 0.5%. We'll see if it can make new highs going forward over the next week and a half or so, maybe 2 weeks if we rally after the Fed. My guess is that's probably going to be the case. We start doing technical damage and not able to claw our way back up by losing the trend line, losing the 200. It's possible that the peak is in. My guess is it's not. I said it could be close but no cigar. We still may not reach that upper channel line. My guess is we will. The Dow had become very oversold. I expected the rally, just like back over here. The Dow over here, when the S&P was down over here, I told you the Dow had several gaps that have not been filled. It became extremely oversold, leading the charge lower. The Dow is going to go back and try to fill some of those gaps or all of those gaps. That's going to give the S&P a rebound, and that's when we hit our 20-week moving average. I told you that's possible, that is a bottom. We can get a lower high to fill the gap at 5,200 or a higher high and go up and hit the channel line. We haven't reached yet, but we did make a higher high on the S&P 500. I still think we're likely going to reach it. Selling off in order to momentum to reach that upper channel line in all likelihood. NASDAQ 100 closed flat. It was only down 2 points. So after losing nearly 2%, it rebounded, getting this big bottoming tail. Again, we had taken out the 20 period, we had taken out the momentum cloud just above our 50 period moving average, and we rebounded back up. You got a gap fill way up here for NASDAQ. Again, we'll be watching, is there more work to be done here, or do we begin to rebound back up, hit the upper boundary of the rising wedge in the weekly time frame? That could form a divergence here before all is said and done in the daily time frame. Again, either we have a reversal with the bearish engulfing, which again got confirmation, but the follow-through was only 2 points, so it wasn't a confirmed follow-through because we didn't close below this low. You only closed down 2 points below the previous day. You didn't close below this low. You need to close below that low to have a confirmation and a follow-through. We didn't get it. You closed down, but you didn't take out the previous day's low. You did on an intraday basis, but you didn't close there, and you had a bottoming tail. I still think we're going to rally up into, or maybe have some volatility and rally up, maybe even test the 50 period and rally up, but I still think we're going to go up and hit that upper boundary of the rising wedge. Even if we don't go to a new high, you still have the possibility of a head and shoulders here. My guess is still under construction, but we closed flat there on Friday. S&P and the Dow was strong on Friday, validating the VIX's prediction of an update for the S&P. So the question now for the NASDAQ and the S&P is, again, is this correction done, Or is it the start of a reversal? Did we stop making new highs, or are we going to go up and get one more push higher and again hit the upper trend line? So we'll be watching to see which way it plays out. Again, possible head and shoulders, whether we have the bearish engulfing here as the peak or whether we go up and hit the upper rising trend line and get one more high that looks something like this. I think that it looks like a 5-leg push higher, 1, 2, and then we've got 1, 2, 3, 4, and 5 for 3. This is 4, and then you've got a possible 5. It looks like a 5-leg structure to me, but again, maybe close but no cigar. I'm open-minded to that. Still think it is a strong possibility, and again, we can go up to the upper Bollinger Band. You can't quite see it here because off the chart a little bit, but we could end up forming a divergence before all is said and done. I think there's a strong possibility of that. Might be more consolidation in this level. Got a bottoming tail. Buyers came in. Again, I think you've got a strong possibility we rally into the Fed meeting or just after it if we can establish a bottoming process here for a correction. With the rally, again, we didn't quite reach the 200 period here, but again, the RSI became oversold. It still might form a divergence and come back towards this trend line right here. That is still possible. Broke down from a rising wedge. Again, is the top. We need to see more evidence. Again, same thing here. Is this a 5-leg structure where you have 1, 2, this whole thing being 3, this is now 4, or 4 may not be done, and then we get 5. So we'll be watching going into the CPI and going into the Fed meeting. And we are seeing weakness here. We're below the cloud. We're below the 50-period moving average, but we're still holding above the 200-period moving average. And got a bounce just above the 200, just above the 50-period moving average on the daily chart. And with the testing of the 200, we reached extremes. We turned back up. Again, could be more work to be done surrounding this level. We could even form a divergence here. Momentum, but we did reach an extreme and turn back up. Either means we're getting a bounce or bottom times divergences form, but again, see if those bottoming tails on the daily chart can hold. If we're still forming a head formation, it's not done yet. We moved to new high. I'll be watching the trend line here on the weekly chart. This is the daily here. We never did reach it. We still could, and again, said it could be close but no cigar. My guess is we're going to reach it. Again, we closed out the week strong. Even though we had a down week, we didn't close at the lows. Bottoming tail. Now that could be possibly a hanging man, as I said with the S&P. Could be here too if it's done. NASDAQ ended down 1.44%, down 272 points for the week. It was down a whole lot lower at the lows of the week, giving back the previous 2 weeks' gains, but we didn't close there. So you got this potential bottoming tail. I think we're headed up into this upper boundary. Again, the divergence may or may not be done. Other divergences have called turning points, as I've talked about. And the bottom over here, again, our last divergence, it took its time playing out, but when it did, it gave us the over 8% sell-off back to test our 20-week moving average. I think you're still going to try to go up into this level, but again, you're coming back, losing the 20-week moving average, seeing everything turn bearish, then maybe that's all she wrote. My guess is we're still going to reach these levels going into the Fed meeting, all likelihood. If we just go back up to fill the gaps and get lower highs, we'll see if that is confirmed.